Hey traders, Nick Shaheen here looking at Novavax one more time. I've done a few videos on that and they've been spot on as far as timing and what not to do at the wrong time. That's probably the first step at being a successful trader, is avoid the obvious mistakes, the self-inflicted wounds, so to speak, unforced errors if you're a tennis player. Okay, so looking at this chart, it's pretty confusing, right? Up, down, but it's a lot clearer than you think. This is a daily chart, nothing fancy about it. It's about 1 year worth of data. So you can see that the most of the action, even though we've hung up here so long, the volume is still down here. That's the orange line. It's the volume profile. This is where they traded it the most. That doesn't mean that's where it belongs. It means that just a few months ago, that's where they wanted to trade it by a long shot. This volume up here is barely there. So yes, it spent a lot of time up here, but the bulk has been down here, so it needs time to consolidate. All right, so having said that, let's ignore what I said. I'm not going to look at my older videos because starting from fresh, these were my notes. I did not update them before this video. I had a line drawn here in the downside scenario on the lower time frame. That's why it looks kind of wonky. Nevertheless, it's exactly the target it hit. I didn't make it up. It's the last time they dipped and bounced. So I said must hold, still true. If it doesn't hold, it looks like some sort of a dinosaur. I call them ladybugs, but it's really an inverse cup and handle-ish type of a deal where the bulls defend the neckline and then they don't. And when they don't, it means they're tired, so the bears will overcome them. How far down? Technically, it should be as deep as this whole thing. Scary, right? So that puts it down here. What is that? 83 to 40 bucks. So it puts it down in this area, which wouldn't be crazy. But I'm not saying that's where it's going. So please don't start your hate saying that that's where it's going. The assumption here is that it will hold again. Sorry about the noise. The chat room was open. There's a link to it down in the description. So the assumption is for a trader is that it will hold. So if somebody wants to go long it here, fine, with a tight stop. These are headline stocks. So tight stops might not mean anything because they go up and down 20% in 1 day based on a headline. We don't know. So this is all based on future promise. I don't think it has any sales. So significant sales. So price to sales must be through the roof because it's all based on the success of the vaccine. I know it has vaccine in the name, but they don't have vaccine on the market. The last time I checked, they didn't. So it's all priced on hope that they will deliver something, and more importantly, will they make money at it and when? I can't imagine the government is going to let them make money right away. They're going to have to suffer to provide to the people the cheapest vaccine possible. So they might have grants to operate, but that doesn't mean they're going to bring in the profits. So the trade of the stock becomes different, I think. I'm not an expert. I'm just speculating here that once they go to market, it's different. It's a different story. Now the economics have to kick in. Otherwise, the people will trade you as you're turning in numbers. From a trading perspective, don't give a crap about any of that. I played the levels, and this level has held around 84-ish. This cluster is important, so if you want to split it, 79, 79, so 80. If it's lost, then there's more downside. And the next cluster is somewhere around here. From a level perspective, easy come, easy go, that there's not a better picture of easy come, easy go. So from a Fibonacci perspective, not that I'm a complete Fibonacci fiend, let's say the last extension is what I want to count. Okay, the 50% was here somewhere, 115. If I wanted to count the whole thing, like from here, this is the bottom, the 50% is almost exactly where it's at, just above that. So 96 and change. So regardless, they had a run. They gave back half of it. That should be normal. Shouldn't alarm anybody. And if you bought it up here, then I don't know what to tell you. And you're selling it down here, I also don't know what to tell you. So this is the kind of stock I don't double down on because it has no sure thing. I'm putting quotes in the air. So if it was Apple, yeah, I'd say if I went long here in Apple and I don't double down here or add, then what was I thinking up here? I should get out because my thesis was completely wrong. But in this case, I don't do that because I don't know anything about its future. They may whiff completely like they have before. I told you this is a stock that reverse split from almost being delisted from under $1. So I remember trading it at 12, riding it from like 9 to 12 or 13, I can't remember. And then I got out, and then it got a haircut the first time around years ago down to $1 or 80 cents. So this is a reverse split representation of that stock, so it's different. You have to keep that in mind, in my opinion. So I'm not an expert on its fundamentals, but I can tell you the stock is not what it seems. It looks like a $80 stock. It's not. It just reverse split. I'll prove to you. Watch this. This is a monthly chart. So a stock that has a high of 280 and now is at 80, you wouldn't be too excited about it because this number represents a reverse split. So it's gotten a haircut before. I think this is where I got out of it. 2016, this giant collapse down here. And I think it's 20 to 1 the reverse split. I don't know about that. You can double check it. See, look, it was nothing. So where it came from doesn't really matter, but it should give the realistic expectations. So I don't double down is the message. So if I'm trading it and I want to get long it now, this would be a good attempt with a tight stop, knowing that it's a speculative bet because it's on the future, nothing sure. There's no sure thing. As far as it being an inverse cup and handle, the theory is simple. You lose a neckline you've been fighting over for a long time. That means the other side's got the upper hand on you. They're going to overshoot. You're not going to be able to stop them. It's like when you're doing tug of war. You know, when one side overcomes, the other side just gets rolling. So the sellers are in control of it, meaning pops will be sold. So if I get a rally to 110, 105, and if it was a trade, and I get $10, $15 out of it, I book it. Because onus is on the bulls to break down the descending lower high trend. This is more evident. You say, oh, it's too close to call. Okay, so let's drill down. Tell me it's too close to call. It's not. The bears are in charge. And until they have a trough, and that's that same point I was talking about. You see a trough. How does that happen? No more lower lows. I don't need higher highs. Lower highs is okay, but no more lower lows. You bring lower highs into a point, and then you start building back up. So that's the point. So this is a 2-hour chart. Even on the 60 minutes, same story. If you're active, then you get down to 5 minutes, but that's way too choppy for my taste here. So if we go to the 4-hour chart, same story as a daily almost. You want to see the prof before you bet upside, but if you're betting upside with a tight stop, that's fine. Here, better than here, going into a fail point. But if I catch along here, I'm out at 105-ish. I'm definitely out at 110. I'm definitely out at 120 because all of these are fail points. There'll be sellers there. All right. So again, nothing against the company. This is a pure trading thing. Should I do a Moderna video? Okay, similar comments here, but slightly different technical setup. I'll do another video later. Signing out. Bye.